Hey guys, JJ here. Welcome back for another Wednesday of Zoom Networking. Got a fantastic guest speaker on for you today. I love this guy. He's just an all-around great guy. Like the rest of us, started as a real estate student, became an investor, now a very successful entrepreneur. Young man out of Pace, Morby Sub 2 community. My good friend, Mr. Tom Swan. Tom, how are you?
I'm doing well. Great to see you. Great to be back here on your Zoom.
Yeah,
I'm looking
Zoom,
forward to jumping
podcast,
in.
whatever people call this thing.
Yeah.
Yeah,
Uh, it,
it's a lot of fun and it's good to see you.
it's great to see you.
Before we continue, I want to just cut right to the chase.
Yeah.
Um, for those that don't know you, where in the country are you located?
I'm in Arizona. I'm currently in Maricopa, Arizona, just a little south of Phoenix.
Uh-huh.
I'm originally from Connecticut, though.
That's right. That's right. So you're saying we probably got some of your friends on the call today. You said you saw some names of some folks you wanted to mention.
Yeah, we got Ricardo Guerrero. We got Mark Chang. We got Lucinda. I saw Mercedes Brown's here. Stacy Goodson.
We
Oh,
got the Tom Swan fan club. So you know, one thing I talk about a lot of different things all the time, but we're in real estate. That's how we met. We met through Step Two. We actually met at the Clever Summit a couple years ago, and really got, I think, really best acquainted there.
yeah.
Really got to sit down and have some good conversations at some good length. Um, but we all get started in real estate in a different way. When you were growing up as a kid, was real estate on the landscape for you? Is it something, was you had a contractor, mom, an agent? Or was it something that came about maybe after high school? What did you do? Was it around for you in high school? And if not, what were you doing after high school?
Um, Man, that was a long time ago. But geez, no, real estate, I think it was always on the radar for me, but I didn't really get into real estate until later. More like 2017 was the first time I got into real estate. I guess I bought my first house on my own in 2009, but that was kind of like it was a remodel, and being a what 20 something year old kid, 24 maybe. I was like, yeah, I can remodel this whole house by myself, knowing virtually nothing about it. So it was a project that lasted about 10 years, and we got it done eventually. I didn't have electricity in the kitchen for like 3 years, but that's okay. It's like one of those overrated things. But other than that, I mean, my first investment property, I did a flip in 2017. We were on TV with it. If you ever want to look it up, it's called Flipping Down the Aisle from HGTV, no, DIY Network. It was first time flippers. And
Cool.
so that was fun. Learned a lot about reality TV. And then, yeah, I just, that one flip turned into a few others. And then I moved to Arizona, got into Airbnb, built an Airbnb portfolio. I've always been more of a business guy than real estate, I'd say. Um, I've done a good amount in real estate, but I've always been more focused on building business than than necessarily um, focused on building a real estate portfolio. I look at it more from the aspect of building a cash flowing business and then reinvesting those profits into real
There you
estate for
go.
the long haul.
So again, you and I met through Sub Two, and as you start talking about cash flowing assets, investing for the long haul, these are things that don't come to people's mind when they start thinking about real estate. They just think
Yeah.
about they want to make some money. How'd you come across Pace? How'd you come across Step Two? Was it a commercial or there some event you heard about? Somebody mentioned his name.
It was dropping bombs with Brad Lee. I saw his podcast on there, and that was my first introduction to pace. And then I that was like February of 22, and then I jumped right into sub 2, the mastermind, and just kind of went off to the races from there.
There you go.
I
Hey,
saw
yeah,
No, I was just going to say I saw the value in the network primarily, first and foremost. And but also obviously pace is pace. So
He's
he's got
amazing.
magnetic uh personality
Yes, he
that
does.
definitely drew me in there.
Pace is definitely amazing. Um, and such a giver.
Yeah.
He's just out to help people. And what he's built is beyond anyone's wildest imagination, maybe even his own. I doubt that everything that he's amassed today is something that he would have the foresight way back when. It just sort of grew and expanded because, as he's become stronger, more successful, more opportunity awaits, has made itself available to him, and he's just been smart enough to run with it and make it even bigger and better.
Yeah.
So my kudos to Pace. Pace, we love
Yeah.
you. Um, so your topic today, my brother, is business credit funding.
Yeah.
And business credit is really important. We have a lot of people on the call today that are new investors, intermediate, middlemen of experience, and some very experienced investors. We're going to have people watching on YouTube weeks and months down the line that are, again, new investors and experienced investors. For those that are kind of new to the ball game here, what do you mean by business credit funding?
It's just what it sounds like. It's business credit, right? So um essentially building business credit, credit in general, personal credit is extremely important to everything that we do. So there's a quote that I love and I tend to live by, which is from Zig Ziglar that said, money isn't everything, but it's right up there with oxygen. And so when you take that into account, like, who has the most money in the world, right? Or, well, in America at least, but it is generally the banks. And, if we're talking the world, we don't need to get into people necessarily, but who has the most money is the banks, right? And so if we can leverage the banks and borrow their money, like, credit is so important to everything that we do. And so in order to get their money, because in the investing world, the banks don't want to really work with us, right? And so we always have to go to hard money lenders. We have to go to private money lenders, wherever else, right? Investor DSCRs and all these different things, non-traditional lending, right? Well, if we can leverage the bank's money and get them to give us capital to work off of, then you can do that. But the question becomes, how do we do that to get them to give us money? Because if you go to them and say, hey, I have this flip that I'm trying to do, they're going to be like, well, pound sand, good luck. Right. But if I go to them and I say, hey, I need a $50,000 line of credit for working capital, then maybe they'll give it to us. Right. If you know the right things to say and the right things to do. So leveraging lines of credit, leveraging credit in general is very important, but it starts with the foundation of your personal credit profile. And so just like if you're building a house, you don't just go build a house on dirt, right? You don't just start framing up walls and put a roof on. It's going to collapse. The wind's going to blow it over. There's nothing to anchor it to. So if you put a foundation in place, now you have a solid base to build that house off of. And so that's your foundation, right? Credit's the exact same thing. Most people overlook their credit, and it is so critically important to so much that we do. It's important to not just money related things, but people, not necessarily in this room, but people out there looking for jobs might, it can impact your ability to get jobs. It impacts your insurance. It impacts so many aspects of our lives. And I just want to put this out there right from the beginning is I personally, if you want my real personal opinion, I think the banking system is bullshit and I think the credit system is bullshit. The way
Yep.
that their work is ancient, the way that they're structured is ancient, but they make the rules and we got to play by them. And so if we're doing that, learning, like, you might as well, just like anything you do in life, right? You might as well learn all the rules of the game. And if you learn all the rules of the game, then you can learn how to manipulate them. And we can learn how to leverage them to the max hence the name of my company. But we can learn how to leverage them to the max, right? And work everything in our favor because the banks don't want us to know a lot of this stuff. And so if we're working it in our favor and we know the stuff that they don't necessarily want us to know, we're not breaking the rules. We're playing by the rules that they made. They just don't want us to do certain things, right? So by leveraging knowledge and we can generate a lot of capital off of that.
Let me ask you because you held up a couple credit cards there, and everybody's got credit cards to one extent or another. And I know that when I was, going from my teens into my 20s, I was in college. I was trying to, get a credit card, and a lot of us, when we're younger, we apply for a credit card. Some people get declined.
Yeah.
you know? And so it was told to me once upon a time that the best way to get a credit card with a bank is maybe get a gasoline credit card first. Or if you're a real estate investor and you're trying to get your business going and you're not solid enough maybe to get those business credit cards going right away, to maybe get a Lowe's card or a Home Depot card or something of that nature, or a Best Buy card. What is your take on this gasoline card, Home Depot card kind of a strategy for people to get their credit going?
Well, so it depends on where you're at. Like first and foremost, it depends on where you're at. If you're young and you don't have any credit built up, that can certainly work. But there's a lot of different ways to go to build your personal credit, right? Like so getting anything on a revolving credit, like yeah, you have to build that up. But if you're diligent about it, you can build credit very quickly. Like you can take if you have zero credit history, which I'm guessing the majority of the people on this call have some sort of credit history. They've had a loan, they've had a credit card. But the thing is that there's much better ways to go about it. Like that's a very slow path, right? There's much better ways that you can go about it. And again, understanding the rules of the game gives you the ability to manipulate the system. Like not to use it in a negative way, but that's what we're doing, right? Like we're going to manipulate the rules in our favor. And that's ultimately what it boils down to. If you want to go that route, like, yes, you can, but that's a very slow way to build credit. Like building a gas card, you're spending what, 50, $100 a month. I mean,
Yeah.
gas prices now, it's maybe like $200-300 a month, but like you're building very slowly. And the thing is to build credit fast, you have to max out, pay off, and do this over and over and over. Right. And so you can do that in many different ways, but it all like there's many different factors to credit. And so it's not just having a card or not having a card. It's on-time payments. It is utilization. It's, if you're looking at your credit report, it's any derogatories, it's inquiries. What else am I missing? There's two other factors that I'm missing off the top of my head right now, but those are all your major factors. Length of credit history and mix of accounts are the two other ones. So your mix of accounts, they want revolving credit, installment credits. And so you're talking like mortgage, auto loan, personal loan. You're talking about revolving credit is generally your credit cards or lines of credit, anything like that. They want to see a healthy mix of credit activity. So to build, like you can build credit very quickly, but it ultimately boils down to, again, I go back to, it boils down to that foundation. But when you have the personal credit structured properly, then you can take that, you leverage that to then go build business credit off of. And business credit.
Well, let me
Sure.
cut you off here for a second. So
Yep.
starting our credit journey with credit cards is completely different than business credit funding. Is that correct?
Yeah, I would say yes, because I mean, if you're talking like 20 something years ago when I started building credit, that's a whole different journey for somebody just starting out with credit.
Okay.
But what I focus on is business credit funding. That's how I've launched my businesses. It gives me access to capital as at will that otherwise I might not have access to.
So no, so does this mean like, we got some amount of credit, we're getting different cards and we max out different cards to get funds?
Business credit funding can be done. It's essentially it's exactly what it sounds like, right? It's leveraging business credit to fund whatever you need. And that could be a business acquisition, that could be a property, that could be a fix and flip. Like the goal, the way to strategize it is to, so there's a difference between business credit and corporate credit, right? There's programs out there that may or may not be pushed in certain communities that focus more on corporate credit. And so corporate credit would be like trade lines with certain vendors like Home Depot, ADP, Granger, Uline, stuff like that, right? So you can go and get a credit line with those companies, but the problem becomes that you can only spend that money with them and you can't spend that money elsewhere. And so you can't take a $10,000 credit line from Home Depot and go, I can't take a $10,000 credit line from Home Depot and go lend it to you.
Yeah.
Right. So that money, if I'm doing a flip, hey, that's great. And that helps to build those trade lines, which builds your Paydex score, which builds your business credit score. That's one of the things. But the business credit score is not imperative to building business credit. I'm bouncing around a little bit here, but
It's okay. So it's a matter of just when we're doing business credit funding, is it having a certain number of cards and looking to pull those funds in and then to use them on a business transaction?
yeah. So I mean, generally, what I recommend is to build as much credit as you can. I always say, like, the quote I always say is you need to be building credit when you don't need it so that it's there when you do. Because
Yeah.
if you wait until you need it or you only get as much as you need right now, when you need more, it is near impossible to get it because it takes time. It's a process. To answer your question, yes, like you can leverage that. So yeah, I got this nice little stack of cards here. I also have a fun little binder full of them as well. And so
Wow.
you're talking about, I just like, all right, so I just opened up like $430,000 in credit lines in 90 days. How'd I do that? Because knowing how to work the system, no, and that's all business credit. The majority of it's 0% interest, and the rest of it is lines of credit. And so a line of credit is essentially like a separate bank account that you can just pull at will and transfer that money straight into your bank account. So if I get a $50,000 line of credit with a certain bank, then I can move that money as needed into my bank account, or they give me a card that I can run as a credit card. So it acts as a checking account. It bills like a credit card, and I can operate it like a credit card or a checking account, and I can just distribute the funds wherever I want. Now, if that's at 9%, or let's just make numbers easy and call it 12% APR, because that's the range for lines of credit is like 9 to 12%. If it's at 12% APR, that's 1% per month. So if I'm arbitraging that money and I go and lend that money to you for a deal that you're doing, and you're going to give me a 20% return on that money in 6 months. Okay, well, 6 months goes by, that's 6%. Now I'm arbitraging for a 14% gain. When it comes to real estate, that's what we're doing with the business funding. And so, the goal is to build as much credit as you can. And a lot of when we talk about 0%, a lot of that is 0% for a time period, but you can perpetually roll that down the road. There's strategies where you can perpetually roll that 0% down the road. And 0% is always going to be, it's going to be an intro rate. It's 6, 12, or 18 months typically. And then you can roll that down the road. So if you get stuck in a deal and you got $20,000 sitting there at 0% and your 12 months is up, well, now you can, there's going to be fees for transferring, but you can transfer that money off instead of paying 29% APR. You can transfer it off for 3% and go for another 12 months.
How does one start this? What are there certain credit cards you think people should look at first? Is it maybe they start in the bank where they already have their personal account and get a business account? Is it related more to a business account or more to a personal account? Or how does one start going to these banks and getting these lines of these credit cards are they the same as lines of credit cards?
Yes and no. So I'll answer that question first and then I'll go back. Credit cards and I mean, it could be considered a credit line, but it's different than a line of credit. So a credit card is just what we all know a credit card to be, right? But generally you want to look for cards that have great intro offers, 0% offers at like I said, 6, 12, 18 months. And then you're going to use it like a credit card. If you meet their intro offer, usually a lot of these cards will offer like anywhere from $500 to $1,200 cash back. And you can leverage that, like as long as if you spend $3,000 in the first 3 months on the card, then you get, $1,000 cash back, let's say, right? Or $1,000 in rewards. So there's rewards cards for travel, hotels, cash back, all gas cards, whatever. Like there's all different kinds of rewards. So that would be where you'd want to strategize first and figure out what works best for your business and your needs. And also what has the best rewards. I mean, credit can be a full-time job. Playing this game can be a full-time job. That's where I really enjoy this stuff. And but if you start getting into it, you can really dig in and be like, okay, well, this card has 5% cash back on gas, right? So I'll use this card only for gas. This card has 3% cash back for whatever, travel, right? And so 3% cash back is pretty solid for credit cards. So like you book all your travel on that because it might be 3% for travel, but 1% for everything else, right? So like you figure out what's going to work best for what your needs are. If you're doing fix and flips and you're spending $50,000-$100,000 on a flip, do it all on credit cards. There's multiple reasons, right? One, you get rewards. And the second reason is you're protected. If a contractor stiffs you or, whatever, you pay them and they don't do the work and they run off the job, well, you can just call the credit card company and cancel the transaction. You can pull it back on them. Or whatever. If you have so much more protection than if you're paying with a debit card or cash, or even so what I would do on flips is I'd get a hard money loan that had distributions, take the distributions, use that. I'd pay the contractor in cards, use the distribution, pay the card. Now I'm still protected and I run all that money through my card and then immediately pay it off. So I just rack up rewards points like crazy. And so that's where like you can leverage credit. A line of credit is they typically don't have rewards and they don't have 0%, but they're really easy. Like if you're looking to liquidate cards, like one of the challenges with credit cards is liquidating. There are people who do liquidation on cards. I've looked into it. It's a little too risky for my taste, but I have many contacts who do liquidate cards because some people who want to lend the money want to liquidate. You're going to get charged anywhere from like 3 to 6%, typically in the 5 to 6% range for liquidation. But you can liquidate these cards. It runs as a transaction. So again, you're racking up rewards. So you're getting money back on that money that you're spending. And then you can lend it out. And, you just got to make sure the numbers make sense.
Savannah, you are on with Tom Swan. What's your question?
So I might be jumping the gun. You might have been getting to this a little later, but to build business credit, you need a good personal credit to start. But what do you do to separate those so you don't have like that personal guarantee moving forward?
You want to build a Paydex score, but that strategy, ultimately, the short answer is you need a business that's doing volume. You need high revenue, because banks will give you credit based on your revenue, and they will lean against the business. But you need a business that's doing significant money, over 500,000 in gross, ideally seven figures. Is the higher you go, the more credit they will give you, and they will extend credit at a rate of 20 to 25%, depending on the bank. They'll give you a line of credit against your revenue, and they put a lien against the business, because now at that level, you're going to have assets. And so I know there's a lot of hype around like, oh, get credit without using a personal guarantee. If you don't have a business doing revenue, I 100% guarantee you will come to a point where they're going to need a personal guarantee, because what they're going to start you off with is trade lines where you can't use that money.
Mhm.
And then you're going to go to a Chase credit card. And as soon as you do that, Chase is going to want a personal guarantee, because unless you have a business that's showing revenue that you can justify with tax returns. You need 2 years tax returns, and you need like a current, like, so it's September 11th, right? It's you need the full year's P&L. They want to see that you're making that same revenue up to this point, and then they won't require a personal guarantee. But you really can't get around it. Like, especially when you're building credit, you can get there. But if you don't have that revenue already, you're always going to have to personally guarantee.
Thank you.
So, yeah, absolutely.
Savara, thank you so much. We got a couple more questions. Mercedes had a question. Could you get more information on what the credit sponsoring is?
So that would be like if if we're talking about the same thing. So that would be like if you have bad credit and so you're trying to buy something that you need a loan or open a credit line, then it's basically a cosigner. So you need somebody to co-sign with you who has good credit, who's willing to take that risk on. That's essentially what credit sponsoring
Okay,
is, or
that makes
they're
sense.
willing to do everything in their name, which typically you got to have a really good relationship with somebody who's going to be doing credit sponsoring. But there are people out there who will do it, but they're going to take a very heavy fee for that because it's very risky.
Mr. Rob Howdy, you are on with Tom Swan. What's your question?
Hey guys, how's it going? Hey Tom, nice to meet you.
Nice to meet you, Rob. How are you?
I'm doing great, man. Thank you. Hey, I had a question. I'm just piggybacking off of Savada's question regarding the personal guarantee on the business credit lines.
Yeah.
You said that does that typically hit 12 months after they've given you the credit line? Is what you're saying? Like say you get to, like, in me personally, I had my LLC established.
Yeah.
And then I had a business line established, business line of credit.
Yeah.
Just as well, it just followed my LLC being established.
Right.
So I didn't have to wait a period of time to get that. But my question was, you mentioned something about a personal guarantee, like for Chase.
Yeah.
They'll come asking for that. Is that essentially after that 0% APR runs out?
No. So you were able to get a line of credit without a personal guarantee?
Yeah.
And do you have any revenue with the business yet?
No.
Interesting. I'd have to look into that as to what might, because I know that exists, but it's not something that happens very often, in my experience, at least.
Really?
So,
well, I guess I'm fortunate. I don't want nothing further. Let's
no, that's totally fine, man. And I appreciate it. Like I don't mind being challenged at all. Like that's something I got to look into, because I want to check with my contacts and see if there's something that maybe I'm missing there. But
okay, well, so then
but
maybe
typically,
you actually answered a question for me there without me asking it. But just to get an answer on that, because right now I've been offered a position. Right now, what I'm doing is I'm an affiliate PML right now.
yeah.
So one of the, we're doing term loans, gap funding, and business lines of credit.
Yeah.
So right now I'm just trying to understand what you're saying about this personal guarantee, because I think that's going to be an obstacle that I'm going to run into when I'm offering these services. Right?
Yeah. Yeah,
So I need to
well,
look into that. With
you're
you know,
saying when you're offering these services, you're going to require a personal guarantee from them, or
no. I'm just asking if that question is going to be coming about towards me that I'm not aware of about a personal guarantee. I guess my question is when I'm assisting others establish business credit lines.
yeah.
Uh, so when I do that, is there something once again, that I'm not knowing, is there a personal guarantee that these banks are going to be asking for at the end of their 0% interest rate?
No. Once it's
That's just,
established, no, you're
gotcha.
good. You're good. If they
Okay.
didn't
Got it.
require it, if you're getting the line of credit off for the business, if you don't mind me asking, how much was the line of credit for?
15.
15? Okay. So, and was that with Chase?
Yes.
Interesting. I'll have to look into it. I have a pretty high ranking uh, contact inside of Chase, and we talk about this stuff all the time.
Really?
But
Huh.
yeah, but that's interesting. I'll have to run it by him and see if there's a like a loophole or a string that was pulled. It could also be the amount. The only thing I could think of is the amount. That's why I was curious about the amount, because generally, like what I'm going for is like $50,000 lines, and those always require a personal guarantee. So
Oh,
it could
yeah.
be if it was under like 15 or 20K, that maybe there's a threshold there that they're not requiring it. But
Right.
generally, what I like, pretty much everything that I'm going for is a max like 50K line.
Right.
And then we're gonna expand that up. So there might be something there as far as a 15, because you can always expand that, right? But
Okay.
but you can only request that increase after I think 6 months. And so I mean 15 is great.
Does that have to show like consistent revenue for 6 months?
Not necessarily. What they're going to want to see is you utilizing that line. They want to see
Okay.
you using it and paying it down.
Gotcha.
And so if you're maxing it out and then paying it off, they'll see that. But at a certain point, depending on how much you're asking for an increase, they're going to ask for some sort of verification.
Gotcha.
Right. Like they'll ask for P&L, they'll ask for tax returns. They'll want to see that there really is revenue. If they're the more risk that they're taking on, the more documentation they're going to want.
Yeah, no, completely understand. I mean, and just to add to what you've been providing, credit definitely is everything.
Absolutely. Absolutely. I'm a huge advocate for it. I have stories on both ends of how that goes, but I've seen a lot of range of this, and I see where it bites people in the ass, and I've seen where I mean, I'm a living, walking case of leveraging a lot. So yeah, it's absolutely necessary to building. There's a quote I love and I say all the time that says, "Debt'll get you rich, but credit will build the empire."
Hey, Ricardo, you're on with Tom Swan.
So I was going to add to I guess the credit sponsoring thing because I was hanging out with a guy that was telling me about like his credit and what he does, and he says that you can buy. There's a site where you can buy spot, and I'm not endorsing this site at all, but it's called Trade Lines Market. You
Yeah,
could buy a co-sponsor or something like that.
yeah,
But we've been in there's been people in Jerome's group because we're in a group where it's just developers,
yeah,
and they've shared with us what they do to pull funds. And one of the guys showed us, he said, "Hey, I'll show you how to do this. In exchange, just show us your new construction. Just like lay out all the blueprints, show us from start to finish your new construction, and I'll tell you what I know." And so we kind of made a deal with him, and he's kind of educated me and Abraham a little bit on business credit because that's something we're kind of doing, but we're still new to it and we're just building it up slowly. So
yeah.
all this stuff's kind of new to us, but
Yeah. There's sites out there that you can buy anything. Like you can buy. It's called the black market. No, no. There's sites you can buy trade lines. You can buy credit sponsors like that. And you can buy age corporations. So if you have a startup business and you want to get that 2 years age, like you don't necessarily need it, but there's a lot of sites out there that sell these. You just got to be careful with them because there's a lot of scammers out there.
yeah.
So You just
That's
got
why
to
I'm not
be really
endorsing them.
careful and make sure, like, you know, without a shadow of a doubt that this is legit. Because as soon as you send them money, you're not getting it back. And so it's if if it's not legit, then you're out, right? Like you got to take responsibility for it. But yeah, I mean, I work with a company that sells aged shelf corpse, and so you can get 2-year-old corpse or more, you know, beyond two, but two is really the threshold that you need for getting credit. And then, but yeah, there's sites for all that stuff. You can get the corporate sponsors and whatnot. And all that does is just if you're in a tight spot in a credit, like with your personal credit, if you're in a tight spot or you need that credit sponsor, you need to get in there and you need something quicker. It helps you get there. You're just going to pay for it.
Tom, man, you've got some friggin' gold nuggets there. I know we could probably go on a little bit, but
Sure.
I'm
There's
thinking,
a whole lot more.
oh yeah, there's so much more. We can't cover it all in an hour, much less 2 hours. It's endless. Um, I do want to thank you for coming on, but I also want to ask, if people want to reach out to you later, maybe watching this YouTube video weeks or months down the line, is there a way people could contact you? What's the best way to reach you? Is it TikTok, Snapchat, MySpace? What's
Yeah.
the best way to reach Tom Swan?
You know Tom from MySpace. I was everybody's friend. No, the best way is probably Facebook or Instagram. Just search me. It's Tom John Swan, all one word. If you just start searching it, I should be the only one who comes up. That's the easiest way to reach me. But yeah, typically Facebook, Instagram is where I'm at. Tom John Swan. I'm working my way up to TikTok before it gets banned. I'll probably get on there and then it'll get banned.
There you go.
And
Hey,
then
but I got one last question for you before
Sure.
we head out. And if the people on the call want to stick around, we'll be doing a little bit more personal connecting with Tom as soon as we end the recording. But I got a networking group, and I'm always talking about the importance of networking and to build our business. And we know one another through stuff too. There's so many educational platforms out there that have a Facebook group for their membership.
yeah,
They've got new investors coming every day who are brand new, inexperienced, and as well as very experienced investors, frequently coming to use social media, Facebook in particular, for the first time as a business tool. They want to get the education, but now they're told to network through social media. From your experience, as an experienced investor, what is the importance of networking via social media, Facebook, to the success of someone's business?
in this day and age, I think it's everything, honestly. It's, I was anti social media for a very long time, and I've had to embrace it because it's an absolute necessity. It's, yeah, I mean, you can't, unfortunately, in the business world, you can't live without it. If you're, I saw a thing the other day that kind of like blew my mind, that we're the last generation that's going to know what life was like without social media, which is just crazy to think about. But yeah, I mean, it's absolutely necessary, man. There's so much out in the world, and if you're sitting there just posting political bullshit and sorry for cursing, I don't know if that's cool on your.
It's cool.
Okay,
It's
okay.
cool.
All right. I don't know if we're PG here or not, but the like just the political crap, like especially being 2 months away from an election, and
Oh, God.
it's just, if all you're doing is going on there to bitch, is you're wasting a lot of money, is really what you're doing. You know, the money goes to the creators, and so you're either creating, which I, at this moment in time, am not doing the best job of creating. That's going to change very soon here. I have to get back in that routine, but it's challenging. But if you're consuming, then you're wasting time, energy, and you're losing a lot of money by just consuming. If you're just sitting there doom scrolling on social, then you're wasting time. Get into the groups, start networking, start communicating with people, put yourself out there. Like, so many people are afraid to put themselves out there, and like, what's the worst that's going to happen? Somebody's going to make a comment and make some snarky remark. Who cares? Who cares what people think of you? Like, stop caring, stop giving a shit what people think about you, and put yourself out there, right? And like, hey, if I didn't put myself out there, I wouldn't have met you. I wouldn't have met Ricardo. I wouldn't have met Mark and Mercedes and these other people in the group. And now I get to meet all of these new people that I don't know. And, it's so important in everything that we do in this day and age.
Well, thank you so much. With that, I just kind of want to wrap up, and I just want to say, if you guys are watching right now on YouTube, please like Tom's video. Please put in the comment section there your takeaways, what you found valuable, important, anything you think that we or I could do to improve what we're doing on my end. But we'd appreciate you guys to please like the video. If you guys are on the call right now, please go to YouTube channel, just like the various videos, put whatever comments down. That's going to help us and watch our videos. If you guys want to get a hold of Tom, again, it's on Instagram. It's Tom John with an H, Swan, just like the bird, _ Tom John Swan _ at Instagram. If you want to get a hold of me, here's my Instagram. I'm on it somewhat, and there's a link to my website, jjazizan.com. If you want to join my group, guys, scan the QR code. Should take you to my website. Be a pulse setting register now button. Please register for the group. We've got great Zoom calls twice a week with phenomenal speakers, and before each call, we're doing Facebook one-on-one kind of teaching tips and tips on networking, and afterwards, like we're about to do, we're gonna do some breakout rooms or some live networking with Tom. But please look for more coming up on Flip Side Up with JJ and Tom. We'll see everybody else out there in the world of Facebook and Instagram and social media, right?
Yeah. I'm out there. I'm out and about. I try to stay pretty active on there. But yeah, shoot me a message and I will get back to you as quick as possible.
There you go. Hey guys, see you guys soon. Thanks for joining us.